Let me start by saying I believe the stocks that I have in my Bus 12 and Bus 13 portfolios are going to hit record highs as artificial intelligence integrates into our internet system and then is delivered to the general public in the future. But we have to get through what I'm calling the debt crisis until that can happen. It's evolving, but we have a looming debt crisis. And what do I mean by that? Well, that's all I've been talking about for the last couple of weeks. And that is that interest rates have gone up, that commercial loans are going to be recalibrated because they usually only have about either a floating or a 3-year or a 5-year duration. And so that cost, that increased cost of debt service will come to the bottom line of some of the companies on the Bus 12 and Bus 13, and it will impact their earnings. And as their earnings are impacted in a negative way, that will reflect on their price. So I am liquidating some of those that I believe are going to be hurt the worst in this coming earnings call and future earnings calls. This will all work through the system by the end probably of 2024, mid-2025. So in the intern, I need to ask myself, what stocks do I want to own? And first of all, what I have to do is find out how financially sound are they and what are the adverse effects of these higher cost of debt going to have on them. And that involves a number of elements. Number one would be how much cash do they have on hand so that they might be able to pay off that debt and it would have no effect. So I got to research and do that. Then I went to Mark, and Mark is our technical analyst. He runs our swing trading program. And I asked him, okay, you look at these based on a technical analysis and you tell me which ones you think I should be in or out on a technical basis. And we post that on the website. Here's that. So then from there, I combine my financial analysis and my technical analysis, and I create what I call my cheat sheet. And I'll share that with you in a second. And what I'm looking for there is, okay, which stocks am I comfortable owning as we go into this debt crisis? And I basically, which are the top 3 and which are the bottom 3 that I need to avoid? And I want to share those. The top 3 that I think I'll be okay earning, and in some of them, I'm not in them right now, so I want to determine at what price, if they get to, at what price do I want to buy into them? And then I've gone through the whole list and said, okay, as this crisis occurs, I anticipate, as I said on the S&P 500, as much as a 35 to 50% retracement in prices, and then at what price, from using a Fibonacci retracement and then support levels, at what price on each of these, I think there's 27 or 32 stocks, do I want to buy back in? Because again, when it's all over and done, if they survive, they will be the ones who will benefit. So let me go into that in this video right after I share that this is not financial advice.
Best of Us Investors presents Kerry Griegmeyer.
Okay, let's start with how I put my cheat sheet together and how I use it. Okay, where it starts is on my website, and I go to Services, and under Platinum, I go to Bus 13 or Bus Portfolio Long-Term Analysis. Long-term analysis, yeah. And this is created by Mark. I introduced you to Mark a little earlier. And what he's done is he's put all of the stocks that I hold, how much I own of them, which I'm in and which I'm out of, and then he analyzes them using his technology and makes recommendations. These are the ones that, as he's saying, I think you should be in, and these are the ones I think you should be out. And then he puts at the point in which he would buy back into them. Okay, so I take that information and then I combine it with my financial analysis. Okay, this is also on the website, and this is how I analyze a stock from a financial point of view. What I do is go in and get what their revenues were in 2023, what their income was, their current amount of debt, what they're paying on that debt currently, and what I anticipate they will be paying for it in the future, and how is that going to affect their price, and by what degree. And then I rank them accordingly. I also show what is their cash flow. I then go in and get the metrics from their price to sales ratio, their current ratio, the debt to equity ratio, and their interest coverage ratio. And that's all information that is created through a service that I have to give me all of the stocks, income statements, their balance sheets, their cash flow, their key metrics, and their financial growth. And that gives me then the ability to assess their financial strength. Then what I do is take that, both what Mark gave me and what the financial analysis gives me, and I put that on my cheat sheet. Okay, this is my cheat sheet, and as you see, here are all the stocks. Here is whether their debt is good or bad, whether their tech is good or bad, where I'm in or out, and when their earnings are. This is real important to me. When I make a decision to buy and sell, I want to know when are they going to impact this with their next earnings. This is their current price, and as we're here, you'll see those numbers change. And then this is their free cash flow. Because what I want to know is if some of these companies get in a precarious position, who are the buyers? Well, I can see right at the beginning, Apple looks like a pretty good buyer. They got $100 billion in their coffers, and Google has $71 billion, and Microsoft has $59 billion. So it gives me some awareness. Tesla down here, I know you're all interested in, has about $6 billion in its coffers. So that gives me a look. Then what I do is say, okay, based on Mark's information, based on my financial analysis, which ones do I definitely want to be in as we move forward? And they're in the yellow. That's Google, Microsoft, and Supermicro or macro computers, okay? Now, if you're not in those, what is the best buying price? This is their current price. This is my target. If I'm going to buy back in, where do I think their potential for them to go down to is? I believe that Google at 140 could be 118. If the impact of this or the Russian-Ukraine war or the Israeli war there, what could they go down to? I believe Google could go down to, based on my financial and Mark's technical analysis, and then my working of the charts, I believe Google could go to 118. I believe Microsoft which is currently at 330, could go to 310, and SMCI, which is currently 290, could go to 215. Then who are the stocks that are in my bus 12 and bus 13 that I definitely want to avoid? And what do I mean when I say avoid? Well, I think there are some stocks that the world just doesn't realize how exposed they are to debt and how it's going to impact them. Whether a war occurs or we go into World War III and everything crashes on that, these three stocks, I don't think the world is attuned to what their situation is. And that is Amazon, Salesforce, and Oracle. And again, why is that? Because of their exposure to debt. I don't think the world recognizes that Amazon has built all these data centers and mortgaged them at either a floating rate or a short-term rate, and their cost of debt is going to skyrocket, and it doesn't matter how much shampoo you buy from them, it's going to impact their bottom line, and they're going to be affected. So I believe that Amazon could go from 331 to 114. I believe that Salesforce, again, because of their debt, could go to 160 from 210, and Oracle this was a shocker to me, could drop from 109 current day price to 93. So that's how I put this together. Now, as you might be able to see in the faded there, I do that for every one of the stocks that are in the Bus 12 and Bus 13 portfolios so that I can watch them on a daily basis. And this chart, this graph, this chart updates. And then what I also do is look at the charts on each of the stocks and reassess, is my target price right? And then I share that with those of you who are in our platinum trade. Let me take you and show you how I work my charts. This is my chart on Amazon. And again, as I say, I don't want to own Amazon right now. And why is that? Well, the first thing I look at is where the buy and sells are triggered by the software that I own. And as you can see, Amazon has had a wonderful run up from December the 27th of 2022 to it reached its high on September the 14th of 2023. And then history says that stocks have a tendency to retrace, and that's called a Fibonacci retracement. And what it's saying is that if it retraces 50%, it'll come down to 113.34, and if it traces 75%, it'll come down to 1930. I don't think it'll make that. Then what this gives me is support levels. And as you can see, this support level, Amazon came down, bounced off of it once, bounced off of it twice, and then the next level of support is down here at 115, which just so happens to be within $2 of the Fibonacci retracement. So that's how I come up with, that's how low Amazon might go when the world wakes up and says they've got more debt than we thought, and they make their statement in their earnings call, because of cost of debt, our earnings have come down from our prior guidance. Bingo, down we go. Down to the support level, down to the Fibonacci retracement, down to the 200 moving day average. It's too obvious, but that's how I do this sort of thing. Okay, that's how the magic works. We've pulled back the curtains. We're showing you everything that we got and how we make decisions, good investment decisions. If you want to be a part of this, you just join the tribe, and you join the tribe by getting on the bus. I think this cheat sheet that I've put together could make a big difference in your life if you have access to it, and I can update it on a daily, weekly basis so that you can simply see, yeah, these are the stocks that are artificial intelligence are going to make the world change, but they have to get through some certain situations. And Kerry's done the hard work on analyzing their financials, and Mark's done the hard work on analyzing the technicals, and I have access to it. How do you get access to it? Again, as I say, you get on the bus. You come to our website, Best of Us Investors, and you find this box. You page down, and you're going to see 3 levels of participation. One is basically just getting on our Discord and chatting with folks about stocks and changing information. And then the next one is to get access to my portfolio. But if you want to know how I get to that portfolio and how I make decisions, you come and you pay for our knowledge. That Mark and I and Trent's knowledge. That's how it works. You know, we don't charge you $500 a month for it, which you should be able to make. No, we charge you $60 a month, and then we build this on your behalf. Okay? That's how you do it. You do it by clicking on the link in the description, which says get on the bus. I'll talk to you more about this in the future, and let's start making some good, sound, based on fact, not based on feeling, based on facts, investment decisions. Talk to you again tomorrow.